On March 4th, 2026, Iran closed the Strait of Hormuz. Within hours, oil almost doubled to $120 a barrel. A family in Ohio watched the number climb at the pump. That same week, Saudi Aramco reported profits up 26%. Analysts said some oil giants could earn $20 billion in extra profit, as much as $20 billion every single week. Same crisis. The family lost, the company won. That gap is the whole story, and it repeats every time. The money did not burn in the crisis. It changed owners. It moved toward the people who already own things. If every recovery seems to skip your street, you are about to see why. I spent 3 months reading the balance sheets from the last 4 crises. The headlines called them disasters. The filings called them record years. Here is the pattern sitting underneath all of them. A crisis is a transfer of wealth wearing the mask of a loss. When people panic, 3 things happen, and the rich count on all 3. First, frightened people sell. Stocks, houses, businesses, at any price. Second, frightened people freeze. They stop hiring and stop taking risks. Third, frightened people pay more. For fuel, for food, for debt. Now turn to the other side of the table. Someone with cash buys what the panicked crowd is dumping, cheap. Someone with assets watches those assets get scarce and reprice higher. Someone with leverage borrows at the bottom and owns the recovery. The crowd runs the panic selling. A few people arrive with cash and leave owning the block. Which side you land on gets decided before the crisis even starts. It comes down to one question. When panic hits, do you own assets or only your next paycheck? Hold that question. We are running it against 4 real crises. Start with 2008. The housing bubble popped and prices collapsed across America. Close to 10 million families lost their homes to foreclosure. American households lost about $11 trillion of wealth in 1 year. Now watch where that money went. Washington moved $700 billion to rescue the banks. The Treasury Secretary running the rescue was Henry Paulson. His last job before government, Chief Executive of Goldman Sachs. That same year, Wall Street paid out $18 billion in bonuses. Private equity firms bought the foreclosed houses by the thousands. Blackstone spent around $10 billion on single-family homes, then rented them back to families who had just lost theirs. Run the question. The families held one asset, a house, bought with debt. When the price fell, the debt stayed and the house was gone. The buyers held cash and credit, so the crash became a buying spree for them. Same crash. One side lost the roof, the other bought the street. Jump to March 2020. Governments shut the economy to slow the virus. About 200,000 U.S. small businesses closed for good in year 1. 40 million Americans filed for unemployment within weeks. The people who owned only a paycheck lost the paycheck. Now the other side of the table again. To stop the panic, the Federal Reserve printed trillions of dollars. That money poured into stocks, houses, and crypto. Anyone holding those assets watched them soar while the streets stayed empty. U.S. billionaires added around $2 trillion during the pandemic. The world minted more than 600 new billionaires in a single year. Moderna had never sold one product before 2020. Its vaccine turned at least 5 insiders into billionaires. Meanwhile, the Small Business Relief Program, the PPP, leaked hundreds of billions. Later studies found about 3/4 of it never reached workers. Run the question again. Own assets in 2020 and the crisis made you richer. Live on a paycheck and it put you in the unemployment line. Now the wars. In 2022, Russia invaded Ukraine and energy prices exploded across Europe. Households opened heating bills 2 and 3 times higher than the year before. In Britain, some pensioners rode heated buses all day to stay warm. Now the other side. That same year, Shell booked a record $40 billion. ExxonMobil made about $56 billion, the largest profit in its history. The 5 biggest oil companies cleared roughly $200 billion in 1 year. The bills that crushed households became the profits that thrilled shareholders. Then came March 2026 and the Iran war. Closing Hormuz choked off a fifth of the world's oil. The energy agency called it the largest supply shock in the history of oil. For drivers, that meant pain at every gas station on Earth. For Aramco, it meant profits up 26% in 3 months. Same barrel of oil. A cost to you, a windfall to them. Wars run on more than oil. They run on weapons. Germany's Rheinmetall makes tanks, shells, and air defense systems. Since the Ukraine invasion, its order book has passed 55 billion euros. Its stock has climbed over 1,000% in 3 years. In America, the backlogs are even larger. Lockheed and RTX together hold over $400 billion in orders. Every headline about a new front is a new line on their sales forecast. Run the question one more time. Own the oil and the weapons companies, and war becomes your best customer. Own only your wages, and war shows up as the bill on your kitchen table. Not every crisis arrives with explosions. The quietest one reaches you through prices. Between 2021 and 2023, inflation ran hot across the world. Wages chased prices and mostly lost the race. Economists gave one driver a blunt name: greedflation. A study of British firms tracked corporate profits since the pandemic. They were up 34%. 90% of that gain went to just 25 giant companies. They raised prices faster than their costs and called it the market. You felt it as a smaller cart of groceries for the same $50. Then 2026 layered on tariffs. The new US tariffs cost about $1,500 a year per household. Officials called them a tax on foreign countries. The Federal Reserve found the cost pass straight through to you. You pay it at the register, while a politician on TV insists a foreigner paid it. Inflation and tariffs are a wealth transfer with no villain to photograph. Your cash buys less each month. Their pricing power buys more. Which brings us to the strangest crisis of all, the one that looked like a boom. In 2026, artificial intelligence became the biggest story on the planet. For workers, it arrived as a threat. Which jobs survive? For asset owners, it arrived as the biggest market rally in history. In April 2026, Nvidia crossed $5 trillion in value, the first company in history to do it, worth more than the entire economy of Japan or of Germany. One chip company larger than most nations on Earth. In October 2025, Elon Musk passed $500 billion, the first person on Earth ever to get there. The 15 richest people added $747 billion in 1 year. By early 2026, billionaire wealth hit a record: $18.3 trillion. The 12 richest men now outhold the poorest 4 billion people combined. The AI boom did not lift everyone. It concentrated. Most people missed the last step. Even the crash is a transfer. On July 8, 2026, Nvidia shed about $1 trillion in weeks. Small investors who bought the top panicked and sold the bottom. The institutions with cash did the opposite. They bought the dip and waited. Up or down, the pattern holds. The asset ends up with whoever had cash to hold through the fear. So why is it always the same direction? Why never you? The answer is boring, and the boredom is why it keeps working. You most likely own one thing: your time. You sell it by the hour, and a crisis cuts hours first. They own things that keep paying while they sleep: shares, buildings, pipelines, patents, whole companies. In calm years, that difference stays quiet. A crisis turns the difference into a canyon. Fear pushes the person who owns only time to sell, freeze, and overpay. The same fear lets the person who owns assets buy, lend, and charge more. Nobody has to cheat. The rules sort people on their own. That is why bailouts reach banks in days and reach families in years. You might be thinking the game is rigged, so why bother? Fair question. The honest answer is that the direction can change. The fix is slower and quieter than any headline. You cannot out-earn a crisis from the wage side of the ledger. Every crisis here paid owners and skipped the workers. So the move is simple to say and slow to do. Shift what you can from selling time to owning assets. A share of an index fund buys you a slice of those same companies. The dividend that lands on a billionaire lands on you too, scaled down. It will feel too small to matter. Trust that feeling and you stay stuck. Ownership compounds in the background while crises come and go. The next crisis is already being priced on some trading desk. Another war, another shock, another boom that ends in a slide. When it lands, it will split the world the same old way, by who owns and who only works. You cannot stop the transfer. You can choose which side you stand on. Go back to that family at the gas pump in March. The price that emptied their wallet filled someone's dividend. The only question that ever mattered is which end of that flow you are on. Every crisis makes someone rich. Starting now, no rule says it cannot be you.